Hey guys, so over the last few months, we've seen the stock market actually recover from the lows that it was seeing about 3 or 4 months ago, all the way back to all-time highs and even back into the bull market if we are considering January 1st as a kind of reference point for when all this craziness happened. Now, with the S&P, a lot of the stuff that's moving it right now are tech stocks and the tech stock recovery. Now, we've seen stocks such as Apple, Alibaba, Beyond Meat, AMD, all these companies, even companies that may not have been well known in the past, coming up and being successful and maybe even costing more than before the economic downturn as a result of the strong bounce we've seen here on the market in the last few months. However, we are now getting to these all-time high periods where instead of having a large bounce portion like how we saw here at the end of March all the way to around June the 1st, now we're seeing a lot more pullback bounce, and there's not really a clear and concise direction of the market at the moment here as we do start coming into these all-time highs. Now, over the last month, we've seen a lot of changes here in the stock market and a lot more factors that could potentially move the stock market higher or lower here, and they're having a greater effect, such as when Myrna actually released the fact that they were having a lot of positive antibody testing with their new vaccine. Then we saw the stock market bounce all the way to new highs again around June 8th. And then when we were hearing that there could potentially be a second stimulus check coming here within the next few weeks, then we saw the market push up even higher. However, then we got bad news that this check wasn't going to be coming out as soon as expected. We saw a pullback. Then the very next week, we saw these job numbers that essentially reflected the fact that a lot of people were losing their job instead of gaining it back, and that more people were becoming unemployed than employed. And this again pushed the stock market downwards. And all this has happened within the last week or 2 weeks' time. So, this much influence on the market and this many factors influencing a market is not going to make it easy for any trader to potentially trade upside or downside or any type of side here in the next few weeks. That's why I've been recommending a lot of people that instead of trading all these stocks like Apple or Boeing or even Home Depot, trying to hit new highs and trying to hit all-time highs, instead the smarter play would be to trade stocks that are breaking out here. So stocks such as NIO or stocks such as Myrna or Vaxart, stocks that essentially don't have a lot of value, but once they become discovered, run up about 10 or $20, like maybe even Urban One, if you guys heard about that stock, or Genius Brands. Even though I told you guys don't trade Genius Brands when they're at all-time highs, but if you are fortunate enough to hear about a company like this before they've already run up 100%, 200%, even 300%, then yes, it's obviously a good opportunity to get in on these companies, and especially if you are the type of investor to put your money into the market for a very extended period of time and not just try to day trade or swing trade, then you could make hundreds of thousands of dollars potentially holding one of these smaller cap stocks and wait for them to become discovered and become larger here in the next few years. Now, with the market going up and up, we've seen them have about two new highs in around a month. So I would expect them to pull back again all the way to around the $300 range, or maybe even the 310 if we do see a lot of downside here in the next few weeks with the next job numbers on Thursday, and potentially with the stimulus check news getting delayed even further. If it does, then we could see a lot more downside on the market here in the next few days. However, I can be very certain that the market will be seeing new highs again within the month, as there's really no rhyme or reason to what's happening in the market right now. They're just hitting new high and new high and new high. And there's a lot of reasons for this, but there's also a lot more reasons for them to be going to the downside, and it's just not happening. So what I would really say is don't try to trade for new highs here on the S&P. If you are a person who trades S&P options, Apple options, Boeing options, whatever it is you're trading, I wouldn't try to trade for new highs. Instead, I would potentially either trade new stocks that are coming out and new stocks that are not having any established price, such as Lemonade IPO was also a very good one to trade if you were looking for a company that was IPOing and didn't have a set value at the time. Then you could have potentially made $30 to $40 on each stock you had bought. So let's say you had a position of 10 shares, 100 shares, you could have potentially made back $4,000 there in a very short period of time. So that's why I really recommend trading those new stocks, because they always have a lot of hype when they come out, And the fact that they have a lot of hype potentially pushes the price even higher than what the company should actually be worth in the short term. And especially as a new company that hasn't been established and doesn't have any sort of data backing up what it's doing at the moment here. Now, there are also opportunities with companies when we do see these type of pullbacks here, when we see these week-long pullbacks on the S&P, then there are a lot of opportunities to potentially buy a favorable position on companies such as Boeing, Apple, maybe even the banks that haven't recovered as strongly yet. And even airlines are still down at around $11 for American Airlines and Spirit being around 15. So these opportunities are numerous. And honestly, guys, if you are not being able to find your success with the market here, you're not looking in the right place because the S&P has just been insane over the last few weeks. Now, especially if you couldn't find success between the end of March and the beginning of June, then you were completely doing something wrong. However, if you're not able to find success now, it's more understandable, but it's just because you're looking in the wrong place here. Now, the S&P has had a lot of news, like I said, but this news doesn't affect individual stocks as strongly as it has affected the S&P. Now, especially what I'm talking about is the Myrna news. It didn't really make stocks just go crazy up. It made the S&P recover to some extent to what it was before. You can see that they recovered around $2 or $3, $4 in one day. However, this doesn't mean that Apple immediately jumped $50 in one day. They were still down to about the week or 2 week lows, as we did see them come off the high here with the S&P. So you kind of have to see these opportunities and kind of analyze when is the best time to get into a position. Don't get into a position if it's at all-time highs. You're potentially putting yourself at a risk of losing money because of the fact that you're coming in at an extended position and in a position where the stock may need to pull back. That's why I always use the RSI, MACD indicators, etc. to kind of decide whether or not I'm going to be going in. Now, you can see the S&P here has had some incredible volume over the last few days, almost 80 million. However, in the last 2 or 3 days, the SPY has just been moving very robotically, and not a lot of people are kind of putting their money in, especially on the SPY. Even though this is the most traded ETF, there's only been around 50 million to 30 million trades within the day, and that's very uncharacteristic of the SPY here. So what that kind of shows you is that a lot of traders are done trading these all-time highs. They're not buying this stock anymore or this ETF, hoping that it's going to increase over the next few weeks. Instead, people are trading other opportunities and other individual stocks and kind of hoping for their position to be favorable when we do see these pullbacks on the S&P. And especially when we do see these pullbacks on the S&P, nobody is buying the ETF as itself because of the fact that we don't know how far it's going to pull back, because regardless of how much negative or positive news there is, the S&P is kind of moving in a zombie-like motion where not a lot of news is affecting it, and instead there's a lot more buying and selling and kind of fear moving the market more than anything else here in the last few weeks. So just keep a close eye out here, guys. Like I'm telling you, the best way to know what's going to happen in the future here, especially with the S&P, if you still want to trade it, is to look at past data. And the past data kind of suggests that every few months or so we see a new high, then we come down back to the last resistance point, then we see a new high in a month, then the last resistance, then a whole month of trading, then we see a new high, then the last resistance. So just kind of keep an eye on this type of movement and on these opportunities, because if you do buy in on a pullback, you're at a much more likely position to make money than if you did buy in at an unfavorable all-time high. So just keep a close eye out on the market here, guys. There's a lot of factors moving the market, especially take a look at the job numbers, the unemployment numbers, the house rental and purchase numbers, and also the inflation numbers coming out here in the next few weeks, as well as the data as far as how these clinical trials are going on a new vaccine, or how these clinical trials are moving as far as what's going to be happening with manufacturing, which I feel will be the next step, kind of moving the market here in the next few weeks, as we do see these companies get closer and closer to producing a final product here. So yeah, guys, just keep a close eye out on the market. There's a lot of opportunity still, but you kind of have to be more selective with what you're buying because of the fact that the market is so up and down within the last few days, and especially the last few weeks to months time frame. And we haven't really seen this since last year, where they were kind of going up at a slower rate. However, we were kind of getting used to seeing this incredible bounce, and now a lot of traders aren't used to this and kind of losing money as a result. but you just have to be more careful and more selective with your trades and kind of know what you're trading and kind of know what you want to buy and what kind of position is favorable for you to get in, and not just put your money in on any stock and hold it and hope it's going to go crazy within the next few weeks here. So yeah, guys, as always, don't forget to like and subscribe the video, and good luck with the plays.